time for Under 30. So today we are talking SERV Robotics with a new partnership, some second quarter earnings that looked good. And I have to say, the footage on this has me almost sold. I haven't even seen these robotics in real time until I just watched a video, and it's frankly amazing. So here to tell us more now on this really fascinating company, I'd like to welcome in Kevin Green, Senior Markets Correspondent for the network. So Kevin, walk us through what you like here in SERV, because obviously making a nice move to the upside today. We're up over 10%. So a lot of good, obviously a very developmental, still new company, but innovative, I mean, to put it lightly.
Yeah, definitely. And you're actually seeing some pretty powerful investors getting into this name. I mean, SERV is actually backed by Nvidia. Nvidia is an investor within this company here. And it really tries to focus on the robotics side. And let's talk about that deal first, because I think that's actually probably the most interesting thing about this whole company right now is that they are partnering up with SHAK as well as Uber in order to provide robotic deliveries for SHAK orders here. Now, that is actually going to take place and starting off in the Los Angeles area, but they do plan on deploying over 2,000 AI-powered sidewalk delivery robots across the Uber platform by 2025. So I thought that was actually a very interesting story, because you're starting to not only see the AI impact when it comes to generative AI with ChatGPT and things of that nature, but now you're also able to see the impact when it comes to robotics. So that could actually innovate the overall delivery industry as a whole and actually reduce a lot of cost as well. So that was very interesting. And then they also had earnings, and I don't even know if the earnings are really that big of a surprise, but you did actually see some better or improving numbers compared to what they reported this time last year, with a quarterly loss of 27 cents. That did miss the street's expectations, but that was an increase of around 63% from a year ago. And then also quarterly sales coming in at $468,375 compared to the street's expectations of $400,000. That's once again a really healthy increase. So this might be the future. I mean, the Jetsons, you remember the cartoon, The Jetsons? It seems like it's coming to real life here in a matter of years.
Yeah, I was going to say, I can't imagine, and I can't wait until what South Park's going to do with some of this stuff. Be great. But, Kev, I was just kind of thinking to myself, let's think back, 10 years ago, 15 years ago, 20 years ago, the flat screen TV, $10,000 for one of those big ones. Now you can go to like a Costco or something, and maybe for like $1,000 you can get something that's 10 times nicer. This seems like very early stage technology, and it's probably extremely expensive. So maybe they prove the concept for something long term that can be beneficial to these companies. But I can't imagine that this is cheaper than just paying a delivery person, especially when a large amount of their income just coming from tips.
I don't know, Alex. I mean, if you're looking at the productivity gains, this is an item that could be running 24 hours a day, doesn't require any health care, doesn't require any breaks for that matter.
But they're not getting that if they're contractors.
Well, I mean, the individual will still have to pay for that out of pocket. I think there's still an efficiency. I think overall there's an efficiency gain just from a society standpoint. So I understand where you're coming at, but if you're looking at the contracting side, I can buy this particular product, implement it whenever I would like to, and not have to really worry about people calling off sick and things of that nature. And I think over time you probably will see a direct benefit. Now, I think the bigger question though is do people actually want this? Do you really want to interact with something of this nature? I don't know the answer to that, but I think over time it will be efficient. And this is how companies actually become profitable. They're the first ones on the scene. They're able to charge a really healthy price when it comes to their product. The margins are going to be fairly wide, and then as new competition comes into the space, then you're going to see margins obviously contracting. I think this is just the start of a bigger wave that we're going to see on the delivery side. I mean, we are already seeing logistics and robotics being utilized in logistics operations, warehouse operations. Now it's getting more and more into the consumer-centric space where we'll be interacting with it, one-on-one.
Kevin, I just have my doubts because I live in Chicago. I mean, I bike and I feel like these things are going to get hit. It's just a constant traffic violation is what this thing creates. But I guess obviously the technology will have to watch and see how it grows, because I agree this will change the delivery landscape. It's just a matter of when we're actually there. I just imagine myself nailing one of these things on my bike or something and it being a total disaster.
Well, in Chicago, it's going to be very interesting. Who knows? It could cause a lot of traffic damage too, right? And then there's also the fact that you could have individuals that do, bad things to these things or probably try to steal them. I mean, who knows? I mean, this is a kind of a new technology that we're going to be experiencing here. And so Los Angeles is going to really have that first experience, and they're probably going to learn from that and see how they can improve the technology in order to kind of mitigate some of the issues or some of the risks that you're kind of highlighting.
Real quick, Kev, 15, 20 seconds. Stock went from $2 to 24. It's back at 11 now. How does one deal with that? Have you missed the trade already?
I would say no, because at the end of the day, it's a company that is not actually GAAP profitable, and then even on an EBITDA basis, they're not GAAP profitable. I mean, you're talking about a company that had sales of $400,000. I mean, that's not a lot, but you're at the early stages here, and so when you have these type of growth companies, especially that has the backing of, let's say, an Nvidia or a Google, over time, you could probably see a little bit more interest from investors coming into the space. I think it's early innings, and it's not a recommendation by any stretch of the imagination, but we also have to put the perspective that this is not a company that's been around for the last 40 years, 50 years. This is a company that's implementing really new technology that still needs to be scaled up.
Thank you so much, Kevin, and appreciate that breakdown, SERV Robotics.